Well, reforming the business environment in Kenya, what are the pros and cons, and what have we managed to achieve so far? This will form our conversation this morning, and later on we shall be looking at lending to SMEs. Despite many attempts by the government as well as the private sector, lending to SME still remains a challenge to many SMEs, and we'll be proving that statistically as informed by the Central Bank of Kenya. This is Bischik. We are live from Broadcasting House, and of course we have our reporters on the ground. We shall be crisscrossing the country to exactly find out what is happening in the county near you. My guest is coming up next right here on KBC Channel 1. But first of all, let's go to the news. Well, you have heard about the ease of doing business rankings by the World Bank. Of course, you essentially know that this has been scrapped after some serious issues were discovered by an ethics committee of the bank. Before the rankings were stopped, Kenya was ranked at number 56 in the ease of doing business globally. And this has been a continuous journey of improvement through various policy interventions. There are various white paper documents that have been authored by the government in a bid to help accelerate business reforms, including the review of various legal instruments. This is going to be our conversation this morning. And joining us to help us in this conversation is John Mwendwa. He's the head of Business Reforms Unit at the Ministry of East African Affairs and Regional Development. Thank you very much indeed, John Mwendwa, for joining us. The ease of doing business reforms by the World Bank has been the best yardstick of proving that a nation is progressing towards making or creating a conducive environment for business. But now that this has been scrapped by the bank, what are we going to turn to next?
Thank you, O'Brien, for this opportunity to talk to you about the business climate agenda for Kenya. And I think it's good to first set the context. The report by the World Bank was a validator of the work that many governments across the world do, Kenya included. And a validator is a way of ensuring that what you're doing gets measured, gets compared across the market on what's happening. And that comparison has been happening for the last 5-6 years, and that is a outcome of which has been the milestones you have highlighted. But I wish to state that, remember, as government, what we do is we engage the private sector, we listen to them, we hear their concerns, we implement reforms, whether they are validated by a third party like the World Bank or not. Of course, it is good when there is a global validation, like has been happening with the report in the past, because it ensures that we all focus on the best practice globally, as we have been doing. So work continues. There are other reports around the world that measure how well you're doing on the business climate agenda. We are still focusing on some of the other initiatives, and we take pride in the fact that under President Kenyatta's leadership, a lot of work has gone on. And that work is recorded in the many milestones that you have highlighted: legal reforms, business process reengineering, in response to private sector. We can only now prepare ourselves for the next phase to see which other global voice will emerge that will be able to validate the work we continue to do aggressively, of course, with the private sector validating what to do.
And you're talking about the next phase. What is expected to be our next phase from here?
Well, first of all is to just demystify that there's always a stop. Reform is a continuous exercise. And as would be the practice which we do in Parliament every other time, they bring in new laws and policies, as would a business adapt to the changing times in the market. Government continues to realign itself in response to the emerging issue the private sector has, and there is dedicated effort by government to continue to address those things. So if you would have been around a couple of weeks back, the private sector led by KEPSA and CAM and the Chamber of Commerce came together with government and donors to discuss some of the priority areas that we think are fit going forward across many areas. Still, such as registering a business area, for example, which is an area measured by the World Bank, but which still is an issue for us because we need to ensure the small and medium business person is able to register a business. So that work still continues. We want to ensure where we have ended in the last financial year in terms of the reform agenda continues into the new financial year and many other successive years, because we have to progressively change. You know, to perfect is always to change as often as you can, and we're trying to encourage ourselves to do that proactively.
And it's proper that you have brought about the issue of the private sector, and the private sector in Kenya, you know, through KEPSA, Kenya Association of Manufacturers and so much. I mean, they have over the years talked about or joined government in trying to reform the business environment in Kenya. And one of the issues they have always discussed is, number one, the cost of opening a business in this country. The process, as they say, is tedious, is long, and there are significant delays. How do you plan to improve on this?
By the way, O'Brien, this is one of the most advanced areas in Kenya today. And to give you context is, you would be surprised that 3-4 years ago, if you visited the business registration offices just somewhere near Harambee Avenue, there was a sea of humanity, you know, with brokers and people trying to push paper to make things happen. Today, you can register a business at the comfort of your house at midnight. And it's an online process that is fast and efficient. The laws facilitating that process have been reviewed, made modern. We have automated the process. That in itself is a big transition from a manual process to a digital process. The second part of it is to look at the number of interactions that are required for you to register a business. A few years back, no fewer than nearly 10 procedures that you would have to go from this office, to go to a lawyer, to notarize your documents, to pay stamp duties. Today, as we speak, it's a single procedure that exists on a portal. You log in, you register, you make your payment, it is done. Our goal is to ensure that we do registrations of businesses in a matter of hours. Today, the standard that has been set by government through the business registration services, you know, one step, one day, which is about 24 hours. Of course, there could be some instances where there would be some inordinate delays, which is understandable. But coming from a time period where it was 30 plus days to a day or two at a worst case scenario, but mostly under a day, to now the one step, a matter of hours procedure, I think is something to be proud of, one as government, but also two for private sector to tell us. I think the second issue which I think you have raised is on the issue of cost. You know, cost to register business. And different jurisdictions look at this differently. Kenya.
But John, before, sorry for stepping on your shoes, but before you even go to, you know, the cost of registering a business, and I think it is proper that we put a clear distinction, the process of registering a business vis-a-vis opening a business. I mean, those are two issues.
Correct.
It's true, significant milestones, you know, have been covered in registration of a business, and the number of documents that are needed, that are required, you know, have come down. But that's not all. I mean, registering a business is one thing, but once you register, you have to open a business, and that is where now the crux of the matter is. And even if you were to look at the ease of doing business by the World Bank, this is one area where Kenya, you know, fails terribly, because we are ranked at position 129. There are many documents that you need, from tax certificates to registration of names, you know, and so much. And the question has always been, why is it so hard, you know, to come up with a one-stop shop whereby all these services can be accessed and they can be dealt with?
Well, first of all, I think it's a very valid point, which I would wish to just clarify of the processes involved. The dichotomy is there's always perception and there's reality. The good thing about the private sector is what happens in reality, they always are able to validate. So today, for example, the process we are looking at is when you make an application, you get your documentation, and you go and operate, as you have rightfully said. Just by the way, the process of application today, when you get your registration today online on the one procedure, you get your certificate of business, certificate of incorporation for a limited company, for instance. You get your VAT registration, your NHIF registration, your NSSF registration. All those 4 documents come to you at once in a portal, including the company PIN. That is part of the one-stop registration. But then government has also realized there is post-registration requirements that you need as a business to go and operate. What do I mean by this? For example, there is compliance with the National Industrial Training Authority, NITA, which is something you need to register because you may have to have a few employees in your premises you want to hire. So government has decided to waive the registration requirement for NITA for all new businesses with employees up to 100 people, which means a small business is in that category. They will never employ more than. So there is no NITA registration fees. In addition, the Occupations Safety and Health Act that requires also to register business for the OSHA Act for, again, companies up to 100 employees is also free. And finally, I also need to go and register and get a license to open my small kiosk. Also, for the first 2 years of that business that I've just described, single business permit fees are also waived, it's free. So that at least they can get into that bandwidth. And you see, the other part which comes after now you begin operating are things to do with tax compliance, for example. And iTax is there through KRA, that it is a digital platform when the time comes, because you don't pay tax at inception of the business some point down the line, then you can be able to do that as well. So the ecosystem of the processes and the during and post has been mapped out. A lot of work has gone in because to enable you to waive a fee, government takes up that cost, passes that benefit to the private sector, changes a law here and there, regulation. And that wholesale process I've described has made it possible today, if you're in Maralal or Lamu and you have internet connection, what I've just described, you can get through it. So that is the experience. We may not articulate it as passionately as the private sector would sometimes want us to, but we're trying, through the help of some of the stakeholders like yourselves, to tell the story as it is, and then we can ensure we can begin to really communicate, change and reform in a manner that is sustainable.
That is at the national level, at the national government level, when you want to open a business. After you have done all the registrations, then you meet the county government, okay, whereby you have to pay business permits, okay, you have to pay fire and safety certificates, okay. Well, now you also have to employ security if your business demands so, and all these, okay, adds up to a layer of operational costs, okay. And there has always been this argument that is it possible to have a confluence whereby the national government and the county government, they meet, instead of having to pay multiple certificates, multiple levies and multiple fees to national and county government, so that you can have just one shop whereby you deal with this thing and that's all. And a good case is given of Rwanda.
Well, one of the things that we are alive and we are aware of is circumstances for different areas, for example, living in our country, are different. And our circumstances in our republic, we have a devolved system of government. So there are those things at a national government where we have, discretion to do. There are those where we have to interface with the counties to begin to fix those things that are highlighted by private sector that are pain points. And for example, as I highlighted, the single business permit whilst the waiver happens in Nairobi, is actually administered through the county government of Nairobi. And you would realize that reform has been done at the national level in collaboration with the county level, but the implementer is the county government. To your point more of ensuring that the benefit and the duplicity you are describing in counties doesn't happen, there is need for more concerted efforts so that the autonomy of counties and the interface between what they do and how it affects private sector is really clear. And we have begun to have very progressive conversation with some of the counties, and we did invite them to this year's reform agenda session. And we have now begun, and we have a commitment from the Council of Governors to ensure we begin to isolate the easy wins initially as we begin to progressively claw back and remove some of the bottlenecks to doing business in counties. Because, as I would say, circumstances are different for each of the other counties. But more to the regional front, where you have given an example of Rwanda also, again, you would realize economies and sizes are different and our circumstances are different. We have a much larger economy with a much wider geographical span. The cost of administering business services, for example, in Kenya, would, because of geographical span, be larger than Rwanda, for example. I'm not saying that is the case.
Am I trying to get the bureaucracy involved in opening a business is supposed to be asymmetrical to the geographical size of a nation?
100%.
Where is the correlation, honestly?
But the thing is, there is clarity on transitioning to be the best in what we do. So we want to ensure the best practice in Nairobi or in Kajiado is the same best practice in Laikipia. But remember, it takes time and phases to be able to get everybody at par. And I would be correct to say there has been good work to improve business climate in Nairobi in some focus areas which are primarily captured in the World Bank Index. We have done some good collaboration work with the County of Mombasa, for example, and Kilifi, and Kajiado, and Kisumu. But we realize pockets of best practice need to be expanded. So this year, for example, we have broadened the scope. We are stretching down to 10 counties. And then with a lot of other factors holding constant, it can now grow to the entire population. Because, once the good practice is embedded, and hopefully O'Brien and team can come and tell us, by the way, the best place to do business is County X and the worst is County Y. They would possibly look and say, wait a minute, why is this so? And then begin to want to fix a lot of those things. But I said it takes time, planning, looking at different circumstances to go there. And private sector would benefit largely around the common thematic issues that government continues to fix. And we have just to have that synergy between national and county level. It's not an easy conversation, of course, you are well aware, but there is commitment across to ensure that we continue to be responsive and we continue to address the concerns of the private sector.
And thank God, I mean, now, the focus is now slowly turning outside Nairobi, because when you look at the reforms that have been carried over the years, I mean, there has been a large concentration of it has been in Nairobi. But the question is this, so what happens to the people in Mandera County, for example? What happens to the people in Lamu County? Because they also want to do business. So what do you plan to do to accelerate reforms outside Nairobi, business reforms outside Nairobi?
By the way, you would be pleased to note, O'Brien, that the reform agenda at the national level, for example, on registering a business, is applicable for the entire republic from all corners of the country. There are other reforms in the construction services sector, for example, that are cross-cutting. There are reforms at the Port of Mombasa on import and exports that is, the artery of our business, corridor, along the northern corridor all the way into some of the neighboring countries that affect the entire economy, and that has been done. There are reforms on registering property by our colleagues in the Ministry of Lands and other areas that are ongoing to fix the business environment across. And this is where you're right in saying we need to see now how we can be able to specifically hold our colleagues in counties to the business climate agenda of them to be responsive and as precise as possible in the areas they focus to fix, so that the narrative that it is only happening at the NAF center, which is the city of Nairobi, can be demystified, and we can realize, oh, by the way, these X services are in all counties, and this new bucket is joining the list, specifically just for the counties only. And I'm sure that is part of the communication that we're trying to do, to ensure we demystify, we share more information and insights, and we can also receive feedback, so that we get to know what has been working well that needs to be made better, and what is completely not working, that we can ensure through the collaborative effort we have with the counties, we continue to do.
John, look, for a large investor who wants to invest in Kenya, I mean, before they can finally open their business, they have to go through various and rigorous processes. For example, you've talked about if at all you're planning to put up a building, you have to be given the go-ahead by the National Construction Authority. If you want to get connected to the national grid, you have to go through the Kenya Kenya Power and Lighting Company, KPLC. If it is a hospital, you have to be certified by KMPDU, I mean Ministry of Health, and all these layers of registration. I mean, some of them are not available in some of the counties. You have to come to Nairobi. Why is it so hard for us to have a one-stop shop for all these procedures, that you go in, you do everything there, you come out with all the certificates that you need?
Well, O'Brien, you have a valid point. I would just like to respond by saying there are different facets of looking at this. There are the cross-cutting business categories that today you can all register through the business registration service, for example, private limited companies, limited liability partnerships, single business names, and the sort of bucket that we all know of. That continues to happen, but you would find out there are other categories which are specialized in nature, require special licenses for obvious, possibly health and safety reasons, security reasons, for example, that you would find there is an additional deliberate layer that the national government puts in place to ensure it is done. And these are not done to ensure we impede the private companies and businesses from operating. We just want to ensure also we look after our people, because remember, a government is there for the social part it plays to look after the citizens. So it is entirely up to the private sector occasionally to say this area we think has been over-regulated, and that has been a conversation around regulation and over-regulation that the private sector has continued to raise. But I think government continues to be very responsive to ensure cross-cutting areas are fixed, and the new ones that are coming up where we feel there could be layers of overlap, that is why we are here. We are listening, we are mapping out these processes, recommending new ways of looking at it. But by and large, cross-cutting issues tend to take the bulk of 80 to 90% of everything that we do. And then we look at the the exclusions, the smaller percentage, and look how to begin to attack it. But it will never be all in one bucket for obvious reasons. But as long as we move the needle in the majority of the issues that we need to, we should be on the right trajectory.
So as you are saying, I mean, it may not be possible, I mean, to have everything in one place and everything done at the same time, I mean, because there are various requirements at various points. But how do we then lessen the waiting time? For example, it takes between 10 to 45 days for you to get connected to the national grid. That is for your property to have electricity, and this can even take longer, depending on where you are. So what do we need to do, I mean, to lessen the days that you have to wait? Because look, investors, they also have options. It is not just in Kenya where there are investment opportunities. They are all over the place, and the world has become so competitive that, as we say, time is money in business. I don't have to wait for my documentation which will take three months in Kenya, if I can move to another destination whereby it will take 2 days or 1 week. So what do we exactly need to do?
Yeah, I will address the issue of connectivity with actually some specifics, but just maybe before then is, you see, when investors look at us, they look at various competitive issues that make us a destination that is favorable to do business. For example, we have a very productive workforce. Our people are very productive, hardworking. So the productivity of a person in Kenya compared to a country X or Y in the region could be, giving a cost advantage to a business. And they would want to say that is a good benefit to do business here. But secondly, to your point,
but you must always remember that Kenya is not competing with only with its regional peers. I mean, Kenya is competing with the world.
Sure.
We are competing with South Africa. We are competing with the Philippines. We are competing with Egypt.
Correct.
So it's not just Uganda, Tanzania, Rwanda, Burundi, and Uganda. We are competing with the world.
Sure. And the cocktail of the mix, the right mix that gives us competitiveness would be made up of various factors. Productivity could be one of them, logistics, cost of logistics, like you said, the time that you incur to get various services. And if I shift closely the issue I've mentioned on connection to power, for example, you would find that it used to, O'Brien, take 160 days for a small business to get connected to power, a small warehouse within Nairobi. Today, that timeline, having been categorized and prioritized, has come down to less than 20 days. There is progress. We would, of course, want to measure ourselves against the best in the world. As you have said, we are not competing amongst ourselves. The best country in the world today connects power within a day or two. Our circumstances may not allow us to, at the moment, hit that target, but the growth that we have seen, reducing that timeline by more than, close to 60% is something to be proud of. But it is not yet there, and there is continuous goals. So what are we trying to do? Our colleagues in connectivity in KPLC are trying to tell us, what? We think actually we can do this in about 7 days. And that will be the gold standard that we set, and it is coming. It will happen, I'm sure. But it takes time. If we have come from 160 days to about, less than 20 days, I'm sure the report that you have was about 40-something days for business connections, is a different issue. But of course, this is again, in Nairobi. It will be a different story for a consumer in a far-flung part where, there are fewer consumers, and again, with some of the programs the government has, like the last mile connectivity, the reach and the breadth and getting connected to power will continue to get better. And one of the things we have done is to ensure they have digitized the application portal, is now online, and to ensure that the procedures required are no fewer than just 3, for example. So that experience that customers have is part of the reform agenda that we have been working on, and that we continue to work on to ensure that it gets better as we move forward.
I mean, it's proper to say that it would be very dishonest to sit here and say that something is not being done. I mean, there is tremendous progress that has been made. I mean, look, from the expansion of our infrastructure, to investment in technology, like at the port of Mombasa through the single window clearing system. Progress has been made, definitely, but the issue is the pace of this progress. Is there anything that we can do to accelerate this pace, honestly speaking?
To be honest, O'Brien, the pace has been good. And actually, if you look in the last 6 years, if we came from the bottom quarter globally to now we are nearly at the top quarter, and that is very steep improvement, which is actually very good performance. And remember, this is not attributable to Kenya. It's in comparison to the rest of the countries globally, 190 countries. It is just that possibly sometimes is when the pain points are too many and you do a lot of change, they ease up, and then the smaller ones that come tend to think things are not happening. So we believe the transformational story has been phenomenal. It continues to happen. With the changing dynamics globally because of the COVID pandemic and other issues, there could be some inordinate delays here and there that come up because of some circumstances beyond our control. But all the same, we want to ensure that the trajectory that has been set can be sustained, well into this financial. So when we look at this sometime next year, you can well say, yes, I know it's been big, it could have been better, but I think we did what we could given the circumstances. So I think it's been a good story.
It's been a good story, but a good story can always be made a better story. Let's also address the issue of our politics. I mean, sometimes they get noisy, they become dirty, and now we're getting into the political cycle of our elections slated next year, and a lot of investors, they always switch into wait and see mode. Is there any efforts that we are doing to try and disassociate our investment economy from our political economy?
Well, I have never discussed the subject before. We do not have a measure of that angle. Our angle is just to look at the private sector. We speak to them. They will, at their own fora, discuss business continuity around this season. Our work is just to ensure we remain focused, our eyes on the ball. We listen always, we are responsive, we listen to private sector. We may not fix everything around this time for obvious reasons, but as long as the commitment and the dialogue between private sector and government continues to happen, you will find that government is always responsive, will be held to account by the private sector. So the cycle that is coming will always come every other 5 years, but ours is just to ensure we stick to the script. We do what we must do. But international investors, like any other, are very pragmatic people. They will factor in a lot of issues as they make decisions, and if there's a political angle, as one of the parameters, they will look at it. But by and large, we have been, a successful democracy in many aspects. We hope that it continues to get better. But
Mwendwa, between you and me, I mean, we definitely know that if you do not fix your political economy, I mean, even your business economy is likely to suffer. And look, for example, I mean, the other day, Germany, was going through a transition where Angela Merkel, was exiting the stage, and a new person was supposed to come on board. But their business economy continued smoothly. But when you look here in Kenya, I mean, when we get to about 1 year or 8 months or 6 months to the election, we look like, I mean, it seems like everything comes to us to a halt. We stop everything and we focus on politics. Is it possible as a country for us, yes, to continue with our politics and at the same time to continue with our business? Because at the end of the day, elections or no elections, we'll still have an economy.
Well, look, O'Brien, you have a very detailed World Bank report on doing business. It, by and large, actually does not mention politics because it's assumed it's part of the ordinary way of how economies will conduct their affairs. I think there will be, fora to, deal with this matter with the right people to discuss what that would be. But again, as I said, from where I sit, we just want to ensure that we do as much as we can, regardless of the circumstances, to be as candid as we can with the private sector, look them in the eye, what is working, what is not working, and then if there's a political issue, that we can bucket it, place it in the right place for it to be prosecuted, and to ensure there is the right people know how to prosecute that agenda. Ours is just to ensure where it pertains to business, we give the script, and they have been listening to that.
I've had you. I won't force you to punch above your weight. I'll allow that issue to rest that way. But look, we're having a very interesting conversation here with John Mwendwa, who is the head of a business reforms unit at the Ministry of East African Community and Regional Development here. We are discussing how to reform the business environment here in Kenya, and the issues are diverse, from connections to electricity to access to credit. By the way, when you look at that report, access to credit, was one of the issues highlighted as Kenya is doing fairly badly at position 135, globally.
Not quite, actually.
Its position what?
Actually, getting credit, we are 4th globally.
Is it in terms of the reforms or in terms of rankings?
Is in a way both. There are two things.
The report says, in terms of improving our ratings, or in terms of the reforms we undertook to help in the access of credit, I mean, we were number 4 globally. But in terms of access to credit, okay, we are number 134, if I am not wrong. So those issues, have to be clear.
Well, maybe we can delve into that after the break. But one of the most, advanced areas in our market today is financial access. From mobile money to movable assets being used for credit today in Kenya, and to the numerous financial institutions, circles and everything, there is a lot of capability and breadth that is there for people to access credit. Of course, there is a funny issue of what is the cost of this credit, but access, the reach and breadth of access to credit has been one of the issues that we've been trying to, address. And then we can always be able to discuss and what is the next phase of the conversation around getting credit. What is there? So one of the things that I think you'll be aware, because you are around this market, is, for example, the issue of sharing credit information, which was not there a few years back, and which gives lenders, a better ability to make decisions about certain transactions from certain individuals or borrowers. And that is part of the framework that has changed to ensure that we can deepen access to credit. The second part of it is sharing with the so-called the Movable Property Rights Act, which sets up the framework for people to use collateral which is movable in nature to access credit. And that has been there. Today we have over 1 trillion shillings of collateral registered by lenders with the registry to show that this new framework has actually, made significant progress. So that is the one area of access to credit which is not referenced to in many instances. But the second phase is now the brick and mortar, traditional, lending to businesses, which is done by commercial banks. And if you looked at the size of the balance sheet for the commercial banking sector today, the numbers are phenomenal. So there is a good progress, but of course with challenges like we have during COVID, issues of non-performing facilities, etc., always happen, and we have to adjust according to the market. But government has done its part through dedicated funds, for example, to small businesses, to women and youth groups, just to ensure that is done. And of course, it's never enough. More continues to be done, and more will get rolled out subsequently as government adjusts to the circumstances around the economy.
And you talked about this report, and I mean, it's good that we have this report with us here. Look at this. This is the Ease of Doing Business report, which is which has been compiled by the Minister of East African Community and Regional Development, of course, with excerpts from the World Bank. This is the document that John Mwendwa was talking about. This is his document, by the way. I won't sit down here and lie to you that this is mine, but I have my copy as well. And so, John, there was a time when we used to have the presidential round table with business and thought leaders in this country, where they used to sit down together and they would deliberate and brainstorm on various ways of dealing with obstacles in doing business in this country. These days we don't hear of them. What became of that round table?
By the way, conversation, a round table is a dialogue between government and private sector. Your team was there with us in Naivasha for a few days just in August, where private sector was there telling us the things that are not working to develop a reform action agenda for government to address. And this conversation is taken across government, across many agencies and ministries. It is live, it is happening. And the private sector through KEPSA goes to government offices and hold sessions with government ministries and officials from different agencies to escalate issues, and that is actually how you see reforms being done and implemented, and it continues to be done. We hope in another couple of months we'll get another report to showcase what's new, what has come on stream, and that work is ongoing. It is just that based on circumstances, you always have to change on the modality of how you do it. If you resolve it by going to a parastatal X or a ministry Y, then you don't have to have a large meeting because it is gotten done. Because what we are looking for is the outcome. The outcome is so critical, and the dialogue will happen. It just will be different actors, and it has continued to happen. But the outcome is what is driving us, and it continues to happen.
And the reason why I'm asking so is that I have been, I have managed to attend a few of them in the past, and you could see the richness of conversations in the room. You could see the genuineness of all stakeholders in trying to improve the business environment in Kenya. And for some reasons, I haven't had them, probably maybe in the last 1 or 2 years. Is this something that we are likely to see going forward?
We will see based, also COVID came around with a lot of restrictions. So a lot of the sessions now...
And COVID also brought about technology.
Correct, happened virtually, as I was about to say. But we did in August this year have a very large session with the private sector that I described, just to, give out what are the issues and pain points. And the follow-up of that has continued to be virtual. We hope as the economy opens up and a lot of meetings happen, we look forward, of course, for some optimism that we can do physical meetings. But as I have said, they continue to happen, just that possibly the coverage has not as been aggressive as was in the past, but dialogue and engagements continue to happen at all levels to ensure we resolve the bottleneck that the private sector continues to highlight.
Let's also discuss the issue of attracting FDI or foreign direct investment into the country. And in Africa, Kenya is one of the leading FDI destination. And but because of COVID, there has been some few setbacks. And so you are seeing countries, emerging more aggressive, trying to attract more investment into their countries. What are we doing also to match this energy?
Well, what we are doing on the business climate front is addressing the softest things of, attracting investments, digitizing processes that the business community interacts with in provision of public services, for example. That is facilitating investments, and that has continued. And there is the other piece of logistics and connectivity and expansion of ports and roads, and that work is there for everybody to see, because you address the ease and the cost of doing business. You are getting yourself ready to attract foreign capital. But more so, even as you attract foreign capital, is important also, while we were discussing about small and medium businesses, is important to ensure our local entrepreneurs are able to operate and do business locally. And that is why this is so critical to both our domestic and our foreign investors, because we need both sides of the candle to be pulled together so that we can be able to grow the economy. So a lot of the fixes on the cost of doing business are happening, have been happening, they have been transformational, continue to be as such. On the ease of doing business is coming together. So we are, of course, in a competitive global space. Everybody is putting their best foot forward. Kenya is not being left behind. We have had some transformational things. Recently the Lamu port came on stream. You see what's happening on the highway currently. This is readying ourselves to ensure we are laying the foundation to ensure we are the place to do business, as with every other country. And we want to ensure that if you want to operate in Africa, think Kenya first, and then the region comes, and then everything. So it is ready.
You see, and this is what I always tell my friends. It is possible for us as Kenyans to sit here and beat ourselves to death, complaining and blaming things are not working and all this. But let me tell you this, and this is something that we are going to do with John Mwendwa here. In Africa, I mean, Kenya would be lauded as one of the best countries to invest in. I mean, you know, there are statistics there to say if we are not number 7 or 8, I mean, we'll be number 6. You know, in terms of FDI attractiveness in Africa, and this is based on various reforms and various investment that have been made. And I now want us to spend the next 10 minutes with John, you know, enumerating some of the intervention and measures that have been put in place that have made Kenya, you know, a desirable investment destination. And let's start with road, John. Talk about investment in road that has improved the ease of doing business in Kenya.
Well, the ease of doing business I mentioned is has been a dedicated agenda, you know, led by the president to ensure that we are the place to do business. And in a simplified manner is ensuring that whatever is needed to facilitate the private sector through the public sector is done. But of course, we cannot do everything because we have to be alive to some of the circumstances around us, but we put our best foot forward. And I was just describing the process of registering a business is the initial step that any investor wants to do business in Kenya does. So the government has invested in technology and digitized. Today, that game-changing reform is the first interaction any investor, be they local or foreign, would have to interact with. The other ones would be issues now down the value chain when a business started operating. As I mentioned today, if you set up a plant in Nairobi and you need to bring a container from the port of Mombasa, what are the operations at the port of Mombasa through the agencies that play part in the port, KPA, KRA, and others, to ensure that initiatives such as an expansion of the berths have happened, but the procedures required to ensure your cargo that is required to produce goods here get processed effectively and efficiently in no time through initiatives like the pre-arrival processing, the Green Channel program, the single window which you mentioned, which has been a phenomenal system where all permits to process imports and exports happen through the system, are in place and are working effectively so that we can make our logistics hub in terms of moving cargo very, very fluid. And that has continued to happen. So if you move on to that, for example, to something our colleagues in the Ministry of Lands have been doing is to digitize, for example, our land records. Land is used as collateral in accessing credit.
Yes.
And you know what it means if you cannot secure credit. You know, you cannot be able, for those that need credit.
And actually, John, before we even move to lands, I mean, I'm not going to forgive you if you do not talk about the investment that has gone into improving our infrastructure. And one of the most transformative projects in this country has been the standard gauge railway line. I mean, talk about the politics around it. That's another issue that can be handled elsewhere. But if you talk to importers, they will tell you for sure that one of the biggest improvements in the ease of doing business in this country is the investment in our railway system. From the expansion of the port of Mombasa, where now it can handle more capacity, to the investment in the single window system, to the establishment and the expansion of the ICD here in Nairobi. Those are significant investments to try and improve goods. Talk about that.
Yeah, look, one of the things is, as I said, they are the game-changing infrastructure programs that are ongoing that everybody knows about in terms of facilitating logistics. The corridor that the standard gauge railway does in terms of holding containers, that, you know, cuts the time to transport a container from the port of Mombasa to Nairobi and onwards to another destination, for example, is phenomenal. Even the improved road network and access to markets, not only in Nairobi and the corridor, but even in the hinterland of our country, that is phenomenal. And that continues to ensure we keep our cost of doing business, you know, to make ourselves competitive. That continues to happen. The reason actually I did not get into the hard infrastructure, because that story is actually open out there to tell. The softer things that enable that one to happen, for example, when you talk about the single window system, it is not visible. It is a technology solution that enables us, but is an initiative by government to facilitate trade and logistics. So it is there. There is road, there is rail, there is expansion of the power supply. Those continue to be key planks of how to make sure that we are competitive as a country, and a lot of work and investment has gone into it. And we really look forward to ensuring that the synergy between the ease and the cost of doing business and the narrative that comes out of it can be as progressive as that transformation. Then we can continue to all, nod our heads when we say, look, change has happened. It is a lot, and it is impactful as well. And I think it has been impactful. And the fact that you can speak to it being in the fourth estate means it has happened. But of course, sometimes there is always perception and reality, and sometimes perception may, in one case or another, not be as we'd like it. But it is a phenomenal program under the administration of President Kenyatta that has been ongoing.
And also another very transformative project is the Nairobi Expressway. It has been talked a lot, and this is going to be the second biggest expressway in Africa after the Dakar Expressway in Senegal. It is going to lessen the time you take, and I talk about these, out of experience. I flew from Johannesburg to Nairobi. I took about 5 hours, and that was in 2019. And then it will take you 3 to 4 hours, from JKIA to the city center. This is going to be improved now to less than 20 minutes. Okay. These are some of the issues that have been put in place to ensure that business environment is improved. But as you were saying, these are the hardware issues. There's so much that has gone behind the scenes in terms of software issues. And now you are talking about the lands registry, and there has been a lot of a digitization process. Where are we as we sit?
Well, look, the president launched the National Land Information Management System, early in the year. Our colleagues in the Lands Ministry continue to be, very hard work is really gone into ensuring that they digitize all the records that has gone on. A lot of transactions, for example, within the county of Nairobi, I think by and large digitization is continuing to get to the next level, such that today if you want to do a search, you can actually do it online, as opposed to previously you'd have to fill a paper and go and queue somewhere and give it to somebody to search and give you the outcome of that search. And that work, our colleagues in the Ministry of Lands want to ensure that by some time next year, it not only covers Nairobi, but possibly other counties as well, that we can be able to say it is digitized across the economy. But you'd know by now that Nairobi and the neighboring counties are the nerve center of land transactions, and we are really pleased that this technology that has been deployed by government is come to light. And the private sector would tell you there would be some hiccups here and there initially when a new system comes, but the long-term benefit through elimination of fraud and the issues that we have had with duplicity of titles eventually become a thing of the past. And I look forward to a time where we can transact on land without having to scribble on paper, if the secure digital frameworks exist. And that is what our colleagues are doing. I know we have not done well on the ease of doing business ranking before on that from the World Bank, because it was still a paper-based system. But now that it's been digitized, it is sad the report is not going to come there. But the validator of that transformative work is going to be the private sector, the banks whose collateral lies in these registries, and they are the ones who give the credit. I'm sure the transformative story will be told in due course, and we look forward to really some positive stories out of it.
John, before I let you go, I want you to look into your camera and give or promise the people who are watching you that the business reform agenda is going to be accelerated, it's going to be moved forward, and the conversation will continue from here.
Yeah, thank you, O'Brien. I think what I want to say is we remain focused and committed to listening more to our entrepreneurs and the private sector, ensuring that we engage on a conversation on the reform agenda that is timely, that is impactful, so that the reforms that government undertakes are actually what will cause a positive influence to the private sector. And that is one part. The second part of it is to ensure we sustain a dialogue and a cycle of ensuring that the engagements are sustained. Because what we are doing as a reform team is to ensure on a day-to-day basis, this is the only thing that we are doing. We are listening to private sector, discovering procedures that we didn't think existed, proposing new ways of looking at them, reviewing legislation and the rules of how the business is conducted, and ensuring where is the role of national government to do it. We engage our colleagues in government, we get reforms done. Where it is now like the next phase of ensuring we engage counties, we're engaging counties. So the journey will continue because we cannot stop listening to the private sector.
Yep.
They are the backbone of our economy, and we hope the transformation work will yield better economic outcomes, which is what we all want. But the commitment is we are committed and we remain focused to ensuring that the business climate agenda continues to be implemented on a continuous basis.
Good. John, thank you very much indeed for finding time to be with us here this morning and, of course, explaining to us the business reform agenda that is currently underway in Kenya. The point and the fact of the matter is, so much has been covered. Yeah. So much remains to be done.
Thank you so much.
Have a good afternoon. Have a good morning. And of course, it's a beautiful weather out there, so you can also enjoy some ice cream.
Thank you. We'll do so. Thank you very much.
Very good. We've been talking to John Mwendwa. He's the head of Business Reforms Unit at the Ministry of East African Community and Regional Development, joining us here this morning to help us understand where are we in terms of reforming our business and environment. And of course, you have heard it from him. Time now to switch gear. And of course, our conversation next will focus around lending to small and medium enterprises, the challenges, the opportunities, and of course, the way ahead. That is coming up next.